So some interesting action in the U.S. stock market today. The S&P futures are now back over 2,900. In case you are unaware, there was a bit of a sell-off at the beginning of the month. The Fed cut rates as expected, though they were not seen as being really aggressive enough in their cutting, and the markets actually sold off despite the Fed essentially becoming more accommodative. And as the sell-off intensified, there began to be strong expectations that the Fed would have to cut again in September, because even though the Fed has never admitted it themselves, they certainly do target the price of stocks when it comes to setting interest rates. But that outlook may be beginning to change, because in the last few days we've seen a bit of a rebound in the stock market. Prices are going back up, and I'm sure the president is quite happy about that. Because even though we are actually seeing weakening data, last week there was a pretty bad housing starts numbers and a pretty terrible consumer confidence number. However, the president has been able to dominate the news and really kind of push that news aside. And instead, to overpower the negative impact of that news, he's created good news by stirring up trade talk optimism. And of course, this has been the story of pretty much every stock market rally for the last year and a half maybe. It's all been based on trade talk optimism. It's really like magic. Anytime the president wants the stock market to go up, he can make it go up just by making the market think that he's close to a trade deal, or that perhaps he or the Chinese are softening their stance, and that the trade war will de-escalate. And that will help him to get the market really as high as he wants. I mean, that's how we made new highs these last couple times, has been on trade talk optimism. And of course, there's also been Fed rate cut optimism, which has played a strong role. But interestingly enough, there appears to have formed a bit of a trade-off in the market between trade talk optimism and Fed rate cut optimism, because as trade talk optimism increases, Fed rate cut optimism drops, because the Fed has less of a reason to cut rates if the economy can hope for a trade deal to increase the good prospects of the economy. But of course, the president doesn't like that one bit. So when trade talk optimism gets too high, the president has to bring that down to make sure that the Fed still wants to cut rates, because the president and his advisors feel that cutting rates is paramount, which personally, I think they're being a little too optimistic. They understand that this economy can't survive with rising interest rates, but honestly, I don't think cutting it at this point will help you limp along for forever either. But nevertheless, the White House wants these rate cuts to happen. So every time trade talk optimism gets too high, they have to scale it back and actually hurt the market and bring stocks down a peg so that the Fed feels like they have to cut rates. And they, of course, want to time that correctly so that it's around the time of the Fed meeting. Right now, that doesn't really matter because the Fed's not meeting at the moment. But when we get closer, maybe within a week or two of the next Fed meeting, the president will want to scale back this trade talk optimism, which then will hopefully, in his eyes, be replaced by Fed rate cut optimism. And then after the Fed rate cut happens, the president can again then scale back the trade war and play this balancing act all the way until the 2020 election. This is a very difficult balance to strike, and of course, none of it really has anything to do with the real economy. It's all trying to game expectations and game the way that the algos are programmed, because the algorithms are the algorithmic traders are programmed to buy stocks if there's trade talk optimism. So it's pretty easy for the president just to tweet something out. Or send out one of his guys like Wilbur Ross or Larry Kudlow to say something nice about the trade war, and then stocks magically go up. Now, what the stocks are rallying on today, I find to be particularly absurd as far as trade talk optimism goes, because even though it's all happy talk, none of it is really that lasting or real, the trade talk optimism. This particular case of trade talk optimism has to do with Huawei, and they've essentially said, okay, we're going to delay by 90 days the ban on Huawei buying American chips and things like that and parts for their products. And so the whole market rallied off that news alone. News about one company was enough to spark a a U.S.-wide rally in across the indices. Now, you would think that this sort of news would only really help like chip stocks or companies that directly trade with Huawei, who now are going to be able to trade with them a little more and not lose that revenue. But for some reason, people are just buying everything. And I think today is a really great example of how the U.S. stock market really has become a sham, that indexing really has erased a lot of the importance of the performance of individual companies, because I think that in the modern age, stocks are increasingly fungible, and that it's pretty much just that stocks are stocks. And so if you have good news, stocks in general will rise. Now the Huawei news is, from what I understand, the main factor that's fueling today's rally, but it's not the only factor. There also seemed Wilbur Ross was making some not very unusual points about the yield curve, which you would think now that there's a version of the 10-year and the 2-year. The administration would want to downplay the importance of the yield curve, which Wilbur Ross did. He said, it's not as reliable as people think, which is expected. That shouldn't be anything that shocks anybody. That shouldn't be, oh, wow, this is great news. The yield curve might not have as much of an effect as we thought. Maybe there isn't a recession. They're just taking Wilbur Ross's word for it. That doesn't make any sense. Of course, he's going to say that. And, of course, the Germans are floating a trial balloon about potential fiscal stimulus. Now, the Germans are notorious for not liking to run deficits because they don't like going into debt. They like being fiscally prudent and responsible with their money. But there have been rumors over the past few weeks that Merkel may, in fact, run a deficit in order to try and stimulate the economy, which, of course, is, that's nonsense anyway. I won't get into why the Keynesian crap doesn't work very well. But the important part is that people in governments tend to think that if the government runs a deficit, that's good for the economy. And so the Germans are considering doing that, and of course the markets think that governments running deficits is good for the economy. So the markets also have that good news. Though I will believe that when I see it. Because not only do the Germans not really like to run big deficits to stimulate the economy, they also conditioned this injection of stimulus in the event of some kind of major economic crisis, which is a pretty strong word, and we're not in a crisis yet. So it seems to me like I wouldn't be buying stocks on news that the Germans are going to inject stimulus into their economy in case of a crisis, because that would seem to mean that if the stimulus happens, then we would be in an economic crisis, and stocks presumably would go down in an economic crisis, not up. So trying to front run that German stimulus by buying stocks now doesn't seem like a smart idea at all. And so, our headline-driven economy continues on for another day, and it'll be very interesting when all this is over, seeing how this time is written about in history, because it really is quite remarkable watching this unfold in real time, how we have an entire economy that is really based entirely on headlines. That's where all our prosperity is at this point. There's really nothing great going on, for better or for worse. There's some bad news, sure. It's not catastrophic yet. It could get to be catastrophic. But I mean, really, the idea that the economy is so fragile and that the Fed wasn't even able to raise interest rates, 2.25% without causing mass panic, I think is something remarkably unprecedented in American history. So I will continue giving my thoughts on all of these events in real time. If you gained anything of value out of this video, I'd appreciate you clicking that like button and subscribing. And if you do subscribe, please do click the bell, because I do upload every day, and I'd hate to have you miss one. So I'll see you folks back here tomorrow.